ICICI TV 18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh. With me is Sunya Shinoy. It was a day which was quite clearly a relief from the 4-day fall that we saw in the markets. At least that falling trend got broken. The markets chose to look at Wall Street rather than to look at China or any of the Asian markets that had fallen yesterday. And in any case, today there was a little bit of relief even in the Chinese markets. More importantly, in our own markets, it looked like it was resilience a bit for the Sensex and the Nifty, but quite a relief rally on the mid-caps.
Yes, it was, Lata, and it just proves that this is still a buy on dips market, because the mid-cap index, as you correctly pointed out, was up 1%, and a lot of good quality names like SKS Microfinance, LIC Housing Finance, Crompton Greaves saw buying action. So clearly today was a good day, not too bad. So let's take our viewers through all the top headlines then. Dalal Street shows resilience in the face of weak global cues. The Nifty ends the day marginally higher at 83.55. The Sensex also higher at 27,830.
An important market opinion, Jim Walker of Asianomics says the Chinese economy is slowing down rapidly. China is growing at 5 to 6%. He says nowhere close to the 7 to 7.5% that the political pundits had forecast earlier. He expects the growth to slow down even further towards 4% in 2015.
And cheer for the insurance sector. The select panel on insurance recommends a composite cap of 49% on all forms of foreign investment. Says the term control must be defined in the Insurance Act. Panel members Rajiv Chandrasekhar tells CNBC TV 18 the bill will be passed in the winter session of the Parliament.
Right, that's one reform step at last. But let's tell you the experts that we have lined up on the show for you today. S. Narain of ICICI Prudential will be telling us how he's reading the current trends in the market and the trends in the near term. Jim Walker of Asianomics will speak on the slowdown in China, and Sudarshan Sukhani will join in as always for a technical chat.
Alright, straight to the day's trading action now. The 3-day losing streak is finally over as a late surge on the Dalal Street has finally lifted sentiment, and a single is here to give us more of the day's market wrap. Anuj, you're flat for the frontliners, but so much action in the mid-caps today.
Well, a good day for market after 3 days of relentless selling, but it wasn't really convincing. The Nifty didn't end at day's high and didn't gain much, but the mid-cap stabilized and there was quite a bit of recovery. Also, the PSU banks led the market recovery today. That would give a lot of heart to the bulls. The PSU bank index gained about 3% or so. SBI, PNB, BOB all did well. There was some rally in stocks like Tata Motors, ONGC, Jindal Steel. So there was some short covering as well in today's trade. Now, why did the market not go up too much? Because a lot of stocks actually contributed on the way down. Reliance right on top there, Larsen & Toubro, Hindustan Unilever. So these were some stocks that put quite a bit of pressure on the market. Outside the index, of course, you had the non-banking financial companies doing remarkably well. SKS, LIC Housing, all these stocks were up. Sugar stocks did well. Havels was one stock which was down. But all in all, you have to say that it was not a convincing session. The markets need to spend some more time in this zone for next 2 to 3 days, need to end at day's high for conviction to come back.
Yes, that point may be taken after that bite that we got of falls, continuous falls for 3 or 4 days. The markets will continue to trade warily. As it is today, you will have to say that risk got some bit of appetite. Anuj, we saw the sectors that were doing badly were the IT sectors, even to some extent pharma, and the sectors that did well were actually high beta, the PSU banking sector, and the NBFCs, as you pointed out. In particular, I must point out PFC and REC. PFC, the relief rally was as high as 6%, and that's because in part there is a relief that the divestment will not happen this year. As well, there is a relief that wholesale rates are coming down, debt market rates are coming down, so PFC's borrowing cost could fall a bit. And of course, if the reforms work out, then the power companies will even start repaying them their loans. So PFC, REC did a goodish bit, as did the gem companies, as you can see, Gitanjali Gems. Market opinion?
Yes, in fact, we got lots through the day. So here's the first of them. S. Narain of ICICI Prudential Asset Management says that this correction is a great opportunity for investment in equities. He also adds that he is bullish on Indian equities with a 3-year view.
As far as the market is concerned, clearly I can tell you that, most Indian investors actually were looking forward to a correction. because most Indian investors are still underinvested in equity. And the correction actually gives them an opportunity to consider investing. We are very bullish with a 3-year view is India and US dollar. And so anything which is very dependent on India and is likely to benefit from the continuing strength in US dollar. The way the market is positioned, I think equities is a fantastic 3-year asset class, and maybe fixed income is a fantastic 1-year asset class. This is what we've been thinking, and but the way fixed income markets have rallied, it's just unbelievable. I don't think anyone would have imagined this kind of rally. Things like commodities now are looking pretty attractive with a long-term view. The short-term view looks very clouded, because we have seen that it's possible that some commodity country may get into deep trouble and cause further fall in commodities. One worry which certainly we are hardly equipped to talk about is the fact that there could be some commodity country, just like India is gaining $3.5 billion per month due to the fall in crude oil prices. I'm sure there are other countries which are losing $3 to $10 billion per month because of lower crude oil prices. What happens to them?
Well, there is that uncertainty in the global markets, as Naren put it, but we will have to worry about that at a later date. At least today, the global markets seem to trade with some equanimity. On that note, let's shift back to our own markets and to the futures and options space. Nigel is waiting by with a wrap.
Well, the Nifty broke its losing streak in today's trading session, but remember, traders are betting on that 200-point range because the highest open interest on the call side comes at around that 8,500 call, while on the put side is at around that 8,300 put. So traders are betting that the 200-point range is likely to be maintained in the near term. But importantly, the downside levels seem to be protected after that sharp 200-point cut that we've seen in the last few trading sessions. That's because the 8,200 put as well as the 8,250 put, both of them were being written in today's trade. The 8,500 call, we saw a bit of mixed activity at that particular call, but importantly the 8,550 call that was being written, the premiums roughly around 25 rupees, indicating that upside for the Nifty is capped at around that 8,550 to around 8,600 mark. Individual stocks that one focus today were definitely the banking stocks. So take a look at the bank Nifty on the whole. That one saw buying with the Nifty ending with a gain of only around 15 points, but the bank Nifty was up more than 1%. So SBI, that stock saw big buying in today's session, and the smaller banks seem to have followed up. The likes of Allahabad Bank as well as Union Bank, both of them saw buying interest in today's trade. Havells, though, there was some fundamental news that came out, so on the back of that, that stock was getting sold into, particularly in the last hour of trade, while SKS Micro, that was the big star. It ended higher by more than 10%. Big open interest build up. That stock was flying away. We also did see some short covering on the likes of REC as well as PFC. Both of them did come in for a short covering bounce.
Thanks a lot for that, Nigel. On to some policy action, and it was an action-packed day as far as policy was concerned. FDI in insurance is now one step closer to being increased to 49%. Not FDI quite as much as foreign investment, so that's FDI plus FII. The select panel tabled its report in the Rajya Sabha today, and that panel has recommended a 49 composite cap for foreign investment. It does not restrict foreign portfolio investment with any number. They've also proposed that incremental equity should be ideally used for expansion of the capital base. This means that foreign insurance companies who are currently operating with Indian partners will have to pump in fresh capital to hike their stake in the joint ventures. Well, what's the rationale behind these recommendations and these caveats? Here's Rajiv Chandrasekhar and Naresh Gujral, both members of the Select Committee, speaking to CNBC TV 18.
The composite cap is a simple point, which is that the 49% should include both the FII and the FDI investment. And the reason for that is that that is what is consistent with other sectors. There is an argument that FII should be kept outside the cap, but I think that reform has to be something that is separate from the insurance bill. The issue of bringing in capital into the company in terms of expanding the 49% equity is something that Naresh has raised very strongly in the committee. That is consistent with the desire and the objectives of raising the FDI cap to increase penetration and to increase FDI.
The basic reason why we are taking it up from 26 to 49 is that we want to give financial muscle to the companies so that there is greater penetration. Now the idea is to strengthen the companies and not give windfall gains to a few select individuals in this country. You may recall that at the time of 2G, this is exactly what had happened. There are few individuals that gained. So we want money to go into the companies and not into the pockets of a few rich individuals.
All right, let's talk about the stocks now. Which are the companies that are likely to benefit if the FDI comes through? Ekta Batra is here to tell us more. Ekta.
Well, I'll start with Max India. That stock was higher by around 4.8% in today's trading session. It is expected to be the best play on playing the Indian life insurance segment. Now, Mitsui Sumitomo could raise the stake in Max Life at a premium versus the last transaction. Remember that Max Life is the JV with Mitsui Sumitomo, where they had bought 26% stake from New York Life for 2,731 crores and valued the entire Max Life entity in 2012 at over 10,500 crores. Now, Reliance Capital is the other one where Nippon could increase holding in life insurance business to 49% versus 26%. Remember that Nippon had bought that 26% in Reliance Life in March 2011 for 3,062 crores and valued the entire entity at 11,500 crores all the way back in 2011. Remember that Reliance General Insurance also does not have a partner and can divest stake in that entity as well. Bajaj Finserv also in focus. Allianz, remember, holds a call option to increase stake to 74% in life and 50% in general insurance. This is by July 2016 and April 2016, which is subject to regulatory approval. However, there was an RBI circular dated July 2014 where it states that any share transfer between a resident of India to a non-resident has to happen at fair value. Hence, the predetermined price could come under question. Other beneficiaries include Exide, which owns 100% in the Exide life insurance business. They said they are looking for an international partner according to reports. Tube Investments, where they hold 74% in Cholamandalam MS General Insurance, HDFC Life, ICICI Prudential Life Insurance. They've been in the news for possible listing candidates with regards to insurance. And lastly, SBI Life and SBI General Insurance, which would keep SBI in focus, as well as PNB MetLife Insurance, where there are reports indicating that they could raise funds via divestment of stake. And remember, both those stocks were higher by anywhere between 2 to 3% today.
Right, thanks for that, Ekta. We'll take a break now, but coming up, technical chat with Sudarshan Sukhani, and we will also get you some trading ideas.
CNBC TV 18, celebrating 15 years of leadership.